It's time for us to get motivated, and to do so today is Oladipupo Clement. He is a global investor and trusted wealth creation and retention coach with a career spanning over 2 decades. He has co-founded several companies within the construction, software development, executive education, and agricultural space. He champions the crusade for the economic emancipation of the average African through platforms such as the Wealth Creation Summit and the Mega Housing Summit. Today, Oladipupo joins us on Motivation to talk about how to invest wisely. Now, when I reel out your CV, I always feel like you're about to give a speech. You know, when you're doing that introduction and you're like, ladies and gentlemen, because you have a very, 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 very good CV. But today, we're taking a look at how to invest wisely. That is a very sensitive subject for me, but I'll tell you later. But you take, what exactly is investment?
All right, thank you very much. There are 3 things you can do with money. You can waste money, that's what foolish people do. You can spend money, that's what average, regular people do. And you can multiply money, and I mean, you can invest money, basically. And that's essentially what it means to invest. Investing means multiplying money, okay? So, and that's what wise people do. Money don't go to people who need it. Money goes to people who multiply it. And what I've seen over the years is that money is quite selective. And so those who invest it seem to attract more of it. And that's why even the Holy Book makes it very clear that to him who has, more will be given. To him who has not, even that which he has will be taken away. And so, so that's pretty much what investment is. And there are several vehicles. If you want to connect where you are right now, if you want to move from Lagos to Abuja, there are various vehicles that can move you there. You can go by trekking. It's just that you might not be alive before you get there. All right, so you can go by bicycling. You can go by rail, by the railway. You can go by air. You can go by motor car and all of that. So the same way when it comes to creating wealth, there are various vehicles. And all of these are what determines how early or late you arrive at the wealthy place. Since that's not really the focus, I just want to share briefly on tips. Before we came on live, you expressed some
yes,
concerns.
That was why I also said it that when we talk about investments, I said it's a very sensitive subject for me because these days you don't quite know what exactly you are investing in. Last year it was all about cryptocurrency. For years, it's been about stocks, and we know how the market has gone up and down. And then people will tell you, oh, real estate. And then you buy this plot of land, confident, even build a house, and 20 years' time, Omonile comes and tell you that, carry your house, we need our land back. And so you look at so many of these investment avenues, and you're like, okay, is it even, in quotes, worth it? Or how can I even go about this? All
right, so regardless of the investment instrument you choose, there are 4 tips that you need to adopt. And this is what I've adopted over the years. I've lost money. If you meet anyone who has made money, they will tell you they've lost money too.
Of course.
All right, so just that you must ensure that your gains are far higher, outweigh your losses. All right, and not taking a risk is a risk in itself.
Of course.
In fact, it's a greater risk not taking a risk. All right, so, but the 4 tips are essentially, and this is what will determine what particular instruments you should embrace. Not all investment instruments or vehicle are suitable for all classes of investor. Are you getting my point? So the first tip is, why do you want to invest?
Why do you want to invest?
So this speaks to the objective of the investor and also the purpose of the fund. Now, there's a part of it. I mean, we don't have so much time. Just this Saturday, I did a bit of an extensive session on Instagram at Oladipupo Clement. It's about 66 minutes, so anybody who cares to listen can go watch. I shared some 4 key components of wise investment. So the first one is objective. What exactly is
your purpose
of investment, and why do you want? What exactly do you want to achieve? All right, so some people, they are looking at capital gain.
Yeah.
For some people, it is cash flow.
Yeah.
For other people, it may be to hedge against devaluation or inflation. Whatever the objectives are, it will help you to identify which investment instrument
and
is
to
most
serve
suitable.
As a guide as well.
Exactly. Number 2 is risk. Yes, I mean, there's no such thing as risk-free investment. It doesn't exist anywhere in the world. All right, so there are only moderately risky, low-risk investment, and aggressively risky investment.
You see those aggressively risky?
Yes.
The returns are very good, though.
Absolutely, because there's a connection between...
It's a very high chance you lose your money.
There's a connection between the risk and return. The greater the risk, the greater the return. The lower the risk, the lower the return. But
however, you left something out. The greater the risk, the greater the loss.
Oh, of course.
We tend to focus so much on the gain.
Absolutely, yes. We often focus on what we want to get, not essentially on what are the attendant risks associated with that. But beyond the attendant risk, you also want to evaluate your own risk appetite or risk tolerance. This is also critical. That an investment is what everybody is going into does not mean it fits into your risk profile. And so when I engage with an investor, the very first thing I want to find out is their objective. That will help me to guide and advise on what to embrace.
As you said, I really wish we had time. But when we talk about risk profile, you're talking about the person's health?
No, of
like
course.
The likelihood of a person to have high blood
okay,
pressure.
So no matter how young some people are, they're just risk averse. So they are just interested in seeing their money, not in the growth of the money. Just want to be seeing it.
Yes, just my capital, even if nothing
goes
high.
The whole idea behind having to invest is the fact that even if you have $1 billion stacked somewhere, if you keep spending over time, you will lose the money. So if your money is not gaining, it's not generating steady cash flow, you eventually lose it. So that's essentially the idea behind having to invest consistently over a period of time. Now, the third thing you need to do is to also evaluate how much return on investment you would consider to be fair for the type and the degree of risk you are taking.
ROI.
Yes, ROI, return on investment. So, and then, of course, the fourth one is how much time do you have? You see, one of the things I've identified over the years, especially when I engage with investors and engage with some of my clients, is there's often a mismatch of funds. So you see people who commit short-term funds into long-term investment instruments. And then in some instances, you also find people who commit long-term funds into short-term instruments. Now, what's the implication of that? We don't have much time, but what's the implication of committing? This is mismatch of funds. Now, when you commit short-term funds into long-term investment instruments, what that means is that you will put pressure on, so how do I describe this now? I really wish we had time, but anybody who cares to learn a bit more. Okay, so short-term investment instruments are money markets, essentially, because they are near liquid assets.
Okay.
So if you keep your money in the bank, you know whenever you need it, you can always pull it out. And if you have an agreement with your bank to get your money back within 90 days, there's such an arrangement. So there's a degree of liquidity.
Fixed deposits.
Fixed deposits. But you also realize that the return on investment are not anywhere.
It seems to keep going
it's
lower.
It's not even what you
No,
want.
I think it's not even worth anything
It's
at all.
ridiculous now. So, but the point is that still suits certain objectives. So you want your wife is pregnant, you're getting married in 9 months. You don't commit such fund into stock markets. Stock market is largely a long-term instrument. Real estate, to a very large extent, is also a long-term instrument. All right. So even though there are people who flip, you do all kinds of things within a very short time, you don't gamble with the funds you will require within a short time. Now, the level of risk you can take on the short-term level is also minimal. The kind of risk you are capable of taking when you are taking a long-term perspective, it also can be greater, all right? So there are many, many dimensions to this, but once you consider objective, you consider risk, you consider
evaluate
return on
your
investment,
ROI.
ROI that is comparable to the risk you are willing to take.
Yeah.
And then you evaluate how much time do you have. And then so that you don't commit long-term funds into short-term instruments or short-term funds into long-term instruments. And you'll be fine.
Oladipupo Clement, thank you so much.
Thank
You're
you.
a pro now. You know how to quickly do this thing. That's great.
Thank
you
you
so much for being on the show. We've been able to learn a
Thank
whole
you.
lot
Thank you
from
for
you
having
all
me.
through the month
Thank
of
you for
April.
having me. Appreciate
All right, so that's it on motivation, motivating you to invest wisely. Of course, you know, you can always check him out on social media and ask more questions from him. We'll take this break. Wake Up Nigeria continues in a bit.